to Assertive Yield's industry reports for Q3 2023. I'm Nils, the founder and CEO of Assertive Yield, and today I want to share my personal opinion and my personal view on the market itself, meaning the advertising industry from the publisher's perspective, what we have seen in Q3 and what the outlook for Q4 looks like. This year has been really challenging so far in terms of advertising revenue from all of the economic changes and the decrease in advertiser spend. Now, we want to take a look at how does it look like for Q3 and what is the outlook towards Q4. If we look at the data overall, meaning industry data collected across thousands of domains, internationally, we see that Q3 overall is still far below the last 5 years, meaning across the last 5 years, we are still at a bottom low. However, if we compare the Q3 numbers versus the Q2 numbers, as well as comparing them against the previous years, we can see that the gap between these months has decreased. While there is not really a significant uptick, there is some indication for one. If we look specifically at the month-to-month data and inner-month data, we can see that a major uptick happened towards the end of the quarter, meaning the second part of September, while August has been really weak and July has not been performing so well either. So what does all of this now mean for Q4? While advertisers do have a lot of cash in the banks, the economic situation is still very risky and it is unlikely that we will see much of that enter the advertising market. At the same time, if we compare to the previous years, the COVID period, where all or majority of advertising spend went to online mediums, now offline mediums are back again. So there's a big consideration also to be had that there's offline spend and probably we won't see much of an uptick in Q4. Of course, we're hoping to see the gap closing, but I have my doubts that we will even match the 2019 numbers, which were the weakest ones from the last 5 years in Q4. Now, one movement we have already seen come up a couple of times over the last few years, but never really sticked or kind of cemented in the industry, is the overall work towards a more kind of efficient ecosystem. And while of course carbon emissions are important and so on, I don't even mean this kind of inspiration towards it. I mean purely the inspiration from an operational, economics and efficiency perspective. So when we look back at, for example, the COVID period where the CPMs dropped, it was a big topic. Hey, we need to be more efficient. We need to improve our margins because now they are down from lower CPMs overall. And I'm talking here about the SSP and DSP side. So each time these kind of events happen, we have on one side consolidation happening, of course, and on the other side, a lot of push towards being more efficient overall. Back then, SSPs would ask certain big publishers, hey, please reduce the amount of traffic you're sending to us if it was below certain traffic quality standards. And with quality, it's not actually about the quality of the traffic, it is more about the monetization, how well it can be monetized, how much demand there's available for it. So back then there was a big push for please stop sending us international traffic, for example. So all of this kind of then fell asleep again over the last couple of years, and now it is popping back up as the entire advertising ecosystem is down again in advertising spend. Of course, at the same time, we have now two key elements pushing on it as well. That is the entire green movement, carbon dioxide emission reduction part, as well as all the work transmedia is doing in terms of educating the industry about the inefficiencies, which especially recently has gotten a lot more attention from the entire MFA topic. So when we look at it nowadays and in recent days is that there's actually certain shifts happening within SSPs and DSPs and their relationships, as well as the relationship between the publisher and the SSP. So there are things where DSPs, even big ones like DV360, are now asking SSPs, send us less traffic, pre-qualify the traffic, or we will have to heavily throttle or even shut down the connection. Of course, the same thing has been happening for a long time, but now we see then an inflection point where it is becoming more and more aggressive in terms of what needs to be achieved. And in other cases, there's basically, and another way of looking at it is that we could say like the entire thing of like all of this optimizations, efficiency improvements happening in the ecosystem is all around, we need to improve the amount of revenue we are generating per request received, meaning per request coming into us as an SSP. If we now translate this to the publisher perspective, that means that from a publisher perspective to get good performance long term, we will likely see a shift happening from sending more requests makes us more revenue because we are more likely to get through frequency caps, campaign pacing, and and other barriers, as well as being more likely to be one of the requests that is being led through to the DSP and not being throttled. But with all of this efficiency improvements happening and we focus on request CPM, we will likely see a major shift where on the publisher side we now have to think about how do we also have a clean inventory, how do we send to our partners what they care about, so that we are not negatively being biased, throttled and reduced by our partners. So that if we send a request to them, it actually arrives at the DSP and is not in the majority of times cut out. With Google now also slowly starting to phase out cookies, the big question reappears as to what will be the impact as we had it back in the days of iOS. There's a lot of speculation in the market as to what might be happening, what we might be seeing in terms of actual impact on the CPMs. Of course, there are clear indications as to where things are going, but we can only speculate and estimate what impact it will actually have on the advertising spend within this particular part of the market, as well as the revenue we see on the publishing side from it. If you look at it overall, of course, there is the direction towards last click attribution, towards attention metrics, and this entire bucket of things. Now, how does it really translate to like the CPMs we see on the publishing side in the end? This is the big part we have no idea and we can only speculate. And I don't really want to speculate here, so I want to focus on the part where we actually have some data and some information. When we look at VID solutions on the market, there are some that are providing pretty promising results of like up to a 40% increase in the CPMs on iOS devices. However, more commonly it's like 15 to 20% of the ones that are working really well. Now, the difficulty here is that these identity solutions are either based on publisher-provided identifiers such as an email address or phone number, or they are right now pretty much not allowed to be used within the European market under GDPR, and the same thing holds true in other countries with strict privacy laws. So the big question here as well, we have a very promising uplift on the iOS inventory, which probably can also translate to Android later on. The big question remains, how long will this actually work within, for example, the United States market? Will it ever be able to be used within countries that are under the GDPR and other strict privacy laws? And at what point will privacy laws become more strict worldwide so that it might even not be possible to use these kind of solutions at all anymore? What we can take away from it right now is that at the moment, these identity solutions, or at least some of them, are really working and driving value, and it makes sense, in my opinion, to integrate them, to reduce any kind of impact this phase out of cookies can have, and be prepared for it. However, long-term wise, there are big doubts that these solutions will be able to operate at this level of uplift long-term, and there will likely be other ways of doing so that are more privacy friendly. Now, what is kind of counterintuitive to all of this, the entire basically cleaning up, the traffic shaping happening, meaning deciding what to send to the partners and picking what is quality traffic, is that we have seen a major rise of reseller SSPs in the recent basically months, quarters, or now even like for a year. Now, the interesting fact is here that overall, of course, the perspective of the industry is that reselling is bad. Now, the question that rises is, how can these resellers, and I mean a few of them, actually perform way better than the huge, big established SSPs on the market? How can they outperform Xandr, Index Exchange, Magnite, and so on? And how bad is it really? Because in the end, when we look on the paper, it is driving revenue, and it is driving significant revenue. Now, what many of these resellers are doing is that they are investing heavily in basically bid enrichment, meaning they are working towards improving the amount of information that is available through the bid stream. And in some cases, with some SSPs, we even see huge, like some of the top 5 ones, bidding more frequently and buying more inventory through those resellers than they are buying directly. Now, I don't really have like fully vetted or like good insights into like what all of these resellers are doing internally that they can achieve these kind of levels of performance. At the end of the day, though, what we are seeing is that, yeah, certain SSPs, big ones, are actually buying more indirectly through a reseller than they are buying directly from the publisher. And at the same time, the overall amount of revenue coming from these resellers is a lot higher than it is from the well-established big SSPs with direct DSP relationships. Now, the interesting thing, and what I'm really curious about, is to see, as these resellers are establishing their direct relationships with DSPs, what will happen to their performance in comparison to the other SSPs. Will DSPs now buy more through these resellers, or will they keep buying more through the other big established SSPs, but those then a big chunk of their traffic actually selling through the resellers, although the publisher has a direct relationship? Now, with the market still being down, I wish every one of us the best. While we see some positive direction for Q4, of course, it doesn't look like anything we could be euphoric about. If any of the topics or the optimization parts and similar things on how to best tackle Q4 and going forward you have questions on, please feel free to reach out, leave comments or otherwise. We're always happy to provide more information. Also, please take a look at the PDF version of the quarterly reports, which are going into more depth, sharing the data, sharing graphs, sharing all the insights. Thank you very much and see you soon.